All right, everyone. So we're going to do a deep dive on AWIN. This stock went up over 240% today. And what's crazy is that there was no clear catalyst. There was no news. First, it was up 25%, then 30, then 40, then 50, then 100%. And I think we were all looking around trying to figure out, why is this moving up? Why is it so strong? And yet it kept going higher. This is an example of stocks that can be irrational longer than you can remain solvent. So if people were shorting it thinking it has no reason to go up, next thing you know, it's at $6, it's at $8, it's at $9. It just moves higher and higher and higher. And eventually those early shorts just get forced to cover and capitulate because they're down, they're in the red. It doesn't make sense, but the market can be irrational. So in this deep dive, I'm going to walk you through how I found AWIN and how I approach trading stocks when I'm not really clear on the catalyst. Now, for what it's worth, the market this week has been very strong. GameStop has been back in play, same with AMC. And this sort of resurgence in meme stocks was triggered by Roaring Kitty posting a meme on Twitter that things are about to get serious. And it's really impressive that that alone was enough to get people so excited that they bought as much GameStop as they did and sent it all the way up to over $80 or to exactly $80 a share, which was yesterday's peak. But today, well, GameStop is having a well-deserved day of rest. So let's see. GameStop right here, if we look at the ticker, there we go. I've got my drawing tool up. So GameStop today, you could see, well, yesterday it pulled back, and then today it's a little bit lower. You know, not to discount the fact that it's still up quite a bit over the last week and a half, but we definitely topped out up here. So I think what happened was yesterday, as you may know, if you watch my recap, $20,000 green day. This was solid. Now we're starting to pull back, right? This is, no longer in focus. And so I was kind of looking for what I was going to trade today. I knew that the market was hot, but I wouldn't be trading GameStop or AMC. So when I sat down this morning, I'm looking, as always, at my gap scanner. Now, when I first sat down this morning, I pulled up my gap scanner around 6:30 a.m. on my phone, and I saw FFIE was one of our leading gappers, but it's a cheap stock. It's got nearly 1 billion shares of volume today. That's impressive. And although it's up 200%, I knew because of the price that I wouldn't be that interested in trading it. So I said, I'm going to kind of disregard this one. AWIN wasn't on the scanners yet, and then there were a couple others that were on the scans, but nothing that really looked that exciting. So I guess we should probably talk about, how did I even find AWIN? Now, the way I found this was when it hit my scanners. Now, this is my high of day momentum scanner, and this was I think the last alert that it triggered, which was at $9.80, which was great. That was as it came back up towards the high. So if we put this up on the charts here, that scanner alert was from right here. But clearly, down in here was the place to be a buyer. And that is where I was a buyer. So I actually saw it for the first time. It wasn't on the high day momentum scanner. It was actually on my top gainers scanner right here. And it was down at the bottom of the scan. It was up about 25%. And I pulled up the stock. I looked at the chart. And if we zoom back here to the very beginning of the move, I looked at it before it really was even moving in a considerable way. It was right about here. And what I looked at, I said, well, it's up 25% already today, because yesterday it closed at 280 and it was printing, I think it was 325. So I was like, why is it up? And so naturally I look at my news feed right here and I try to figure out what the catalyst is. So whenever I do these case studies, I talk about step one, finding the stock. So I find stocks that are moving on the scans. I don't buy something if it's not already moving. Step two is trying to figure out what's the catalyst. And in this case, I couldn't find a clear catalyst. Step three is, well, I look at the daily chart. And as I looked at the daily chart, what I saw on this was that we had a beaten up daily chart. And I thought, okay, somewhat recent reverse split, lots of room for a move back up off the lows. That's interesting. We're basically at all-time lows. And so then I start looking at the 10-second chart and asking myself, is there a place where I can manage my risk? Because remember, as a trader, I'm a hunter of volatility, but I also have to be at all times a manager of risk. And that's, today was no different. Just because yesterday was a big green day, I still have to be very focused on managing my risk today and first trying to get myself up just $1,000 on the day. Now, I had actually done well earlier in the morning on a couple of other stocks, so I already had a little bit of a cushion before AWIN came up on my scans. So on the 10-second chart, this is what I did. I pulled it up, and this was at 314 by about 324, and I said, hey, does anyone see a catalyst for this? It then pops up to 345. I said, does anyone see anything at all? I'm not seeing anything. I'm not sure. It goes up, and next thing you know, it's at 364. It's at 380, 390, and I said, you know what? I'm going to take a starter, and I got in at about $4.15. So I got in right here with a mental stop at $4, which is approximately 14, 15 cents of risk. All right. So the way I think about this is not in terms of percentages of my account. I just think of it in cents per share. So if I'm in at 414, stop is at $4, I'm risking 14 cents. So if I'm willing to risk $140, I'll take 1,000 shares. If I'm willing to risk 280, I'll take 2,000 shares. Right? So that's the way I think of my risk when I'm taking these trades. The number of cents per share I'm risking, and then how many shares I'm comfortable taking based on this. Now, the thing with this stock was that because the volume was light, I was concerned about slippage, and I wouldn't have taken 10 or 15,000 shares of it. I just wouldn't have felt comfortable taking that kind of size. So I broke the ice with my first trade at $4.14. And this thing, next thing you know, is hitting 460. It pulls back here for a second. I actually added for the break of 445, which moved my cost basis up. And it goes up to 480. It goes up to a high of 507. So I take some profit off the table at 507. And I'm thinking, geez, that was, a dollar a share. Next thing you know, it goes up to a high of 546. I actually got back in right here for the break through this double top at 507, and we hit a high of 546, but we didn't stay there for long, and I got out. That was more or less a break-even trade. Then it pulls back, and I'm thinking, all right, well, I don't know. We'll see what ends up happening with this. The good thing is the higher volume was on the green candles, but we're definitely selling off right now. So I'm kind of like, I don't know. Not sure if we're going to get any more trades on it. I might be calling it a day. So going into the open, I was up about $1,000 on AWIN, and I was up on a couple of other stocks as well. So I was up about $2,000 on the day. So as we come into the open, all of a sudden we start to squeeze up right here. And as we get over volume weight average price, this is that line in the sand where now I'm interested. Down in this area, not so interested, a little too weak. Above VWAP, it's game time. So right in here, now I'm getting interested for the move up to 450. We break through 450 and watch this. We pull up to 475, up to 5. We pull back here and then through 550, we push even higher, up to 6, up to 7, a little topping tail here. And I kind of thought that might be the high of day. But man, it kept going. This was a nice little cup and handle formation right there. So you've got the pop, the double top, the little handle, and then it pushes even higher. It halts up. And then it opens lower, sells off here, and comes back up. So I'm actually going to show you a live trading archive of this trade here. This was a really solid dip trade for me. Okay, so I'm going to pull this up right here. Let's see. Hang on one second. Sorry, that's the wrong one. Here we go. All right, this is the dip and the rip on the halt resumption. Okay, so we halted at $8 right up here. And then we resume. And as it starts to dip down, I buy 1,000 shares. So I bought 1,000 shares right here at 58. It goes down a little bit lower. I add more shares down here at 7. So now I've got 1,200 shares. I add again as we come up to 750. I'm looking for the red to green. So now, let's see where. There, I added right there. Now we've got 8 on the offer. 820, 846, 850, 887. My average is 762. Look at that. Look at that squeeze up to 928, 929. Classic. That is a very nice dip and rip. Now, you could also call it, in a sense, a micro pullback. I will put a link in the description, and I'll pin it to the top of the comments for my micro pullback strategy PDF, which you're welcome to download. I think you'll find it interesting. You can use it as a resource in your own trading. But this was a really solid trade, and that is where I finished the day. So my P&L on the day, $5,330.15. And that final dip trade put me up over my $5,000 daily goal. So with that, I said, you know what? I'm happy to take the profit off the table. This is a solid day, and those are the results. No real feeling that I need to overstay my welcome today. This did end up coming back up, as you can see. It dropped down, then it came back up to a double top. Wasn't able to break through that level. Did not give the handle, which then could have led to for a move higher. So, I did the best I could on it. In hindsight, given this level of momentum, I probably coulda, shoulda, woulda made more, but I'm walking away with $5,000 more in my pocket than I had yesterday, or even just this morning. And the fact is, this was moving without a catalyst, which does create more risk. So I was mitigating that risk by trading with slightly smaller size. Yes, the profits are going to be a little smaller as a result, but as always, green is good. So I want to remind you, if you find these kind of episodes helpful, I hope you hit the thumbs up. I hope you are subscribed to the channel. And if you want to download my micro pullback strategy PDF, the link will be pinned to the top of the comments and in the description. I want to remind you, as always, my results are not typical. Trading is, in fact, risky. Easy come, easy go. You've seen me have some big red days. You can go back in the recaps and watch them. See, it was 2 weeks ago. A week ago Monday, I had a nearly $10,000 red day. Yesterday, it was a $20,000 green day. So, I have big days here. But one thing that's really nice, I think, about you guys tuning in on this channel is that you see it all. You see a recap for every single day. That was my commitment for this year, that I would recap every single trade, every single day for you guys, so you could see what it's really like. All right, so thanks as always for tuning in. Hope you hit that thumbs up. I'll see you for the next episode real soon.